I'd like to say thank you for taking the time out to watch or listen to this presentation. I want to put my disclaimer here before I get started, because this is a very important topic, and I know where, some of you guys may have met me or seen any content on social media that talks very passionate about protecting your asset. And this topic to have this class, or the inspiration to have this class, is to share awareness, different strategies, also helping or encourage you to seek further information depending on what type of business that you've created or that you own or maybe that you control. There's a lot of things that are changing in our society, in our economic in the world, period, the impact all over the world with changing of the economic power. And we need to also understand the roles that we're going to play when it comes to so many changes in society. But I want to put my disclaimer here, and this is to protect the intellectual property, the legal liability of the person speaking in this video. I want to state here that I am not an attorney. I don't present myself to be an attorney. I'm an economic activist and an advocate. And any information that will be presented to you today will be solely based on information, education, and recreation purposes. In no way do we promote fraud, deceit, or offensive content. I shall not be held liable for any conduct or any content for any party viewing this particular video. So let's get into it. When it comes to starting a business, building a brand, developing an entrepreneurship, a lot of us, and I'm going to use the term us when it meaning in the Black and Brown community, or even if it's more of targeting entrepreneurs, there's a lot of changes that has happened since COVID, or just say the natural disaster, the pandemic, or what have you. And I've recently been getting a high volume of calls of people contacting the office, asking in reference to, hey, is there any possible way that you can offer any guidance? My business is being sued. I'm being sued with my business. I know I should have had a trust prior to being sued, but this particular topic has now become, what did I do? Why was I not in position to not only protect myself, the industry, the business, but also protect the liabilities of creating a business? So that's what we're going to talk about when it comes to protecting the liabilities. Because again, when you look at creating a business, you'll see the LLC, which you see on the front of the screen. The name of this business is Layla Lockwood LLC. But with that LLC is an acronym, and it stands for Limited Liability Company, right? So if it's a limited liability company, then that means there's some type of liability that exists, even if it's limited. So when we talk about the risk factors, a lot, again, and some of these high volume of calls that came in is solely based on personal guaranteeing. Now, if you don't know what personal guaranteeing means, it means that, individuals are like, you know what, I'll promise to pay. I want this funding. I just want to get approved. I want to start this business. I want to, grow in business. I want to buy some equipment. I want to buy product. And if your business is not structured in a way that will protect you, that again, protect that limited part of the liability company, then it's going to be solely on the face of you. So let's get into, let me do that. What are the risk factors when being a personal guarantee? Right? So the roles of personal guarantees in business transaction is when the business owners assume personal unlimited liability for the debts. Now, the reason why it's in bold, unlimited, right? Because most of the time when you're going to get funding, there's also contracts, there's some documents, there's also wording that's put in these contracts that's having you perpetual tied to this, no matter if you live or die, no matter if the business downsized or something changed in the business. Now it becomes the business is at risk and you. So that's why I said personal unlimited liability for the debts. Okay. And in this position, when you sign the agreement, you're promising to repay the loan if the business is unable to do so. Now, if you have the right paperwork in place, you've asked the right questions, you have to be inquisitive when it comes to you and the business that you either operate, control, or own. And the only reason why I give you these three different options, depending on who's listening to this video, some of you may have got along the process of changing, you're not the owner anymore. Maybe you have another entity that's in a position of ownership, or maybe there's a trustee as owner. Right? So if the business is unable to repay the loan, this can involve all business assets, the income of the business, the equipment of the business. Even if you make an investment, sometimes businesses, they're like, hey, I want to buy some stock. I want to buy some capital. I want to buy, some shares. And I want to invest. Maybe you got into stocks or any type of cryptocurrency using the business name. So you want to, again, make sure that anything that is valuable to the business, that you're protecting it. But if you are, these types of business assets, then you have to be mindful of the personal assets that can be at risk, depending on who's taking out these investments, where the income, who's the responsible party of the equipment. If you're signing contracts, especially receipts and transactions, and you don't identify the role of your character or the role that you play in the business, guess what? They're going to assume you have the unlimited liability of those debts. So be mindful. If you're just a manager, make sure that if you're, again, signing an agreement, you put manager next to your name. If you're not the owner, then you put controller or trustee. Or if you want to put, again, director, president, all these different things play a major part to protect the personal assets that can be at risk. Now, also, when you're going into the bank or you're inquiring about funding, financial stability enables businesses to effectively manage and minimize risk. So let's say you come to this table, let's say you have a daycare. Maybe you have a health facility, a health aid facility, right? And you're looking at the books. Some people use digital apps like QuickBooks or Zoho. If you want to write that down, some people use digital bookkeeping, or they may hire a legal professional like a bookkeeper or, again, financial aid. Excuse me, not financial aid. A financial advisor, excuse me. So when it comes to the financial stability, do you have a track record of that? I know that there's a lot of, up and down timelines all over social media, like, hey, come to the table, go inside the bank, just start up a business, just give them your information, and you walk out of there with $50,000 or more. This is where people are now retracting or feeling guilty of their behaviors because they never even for a minute to look at their financial stability when it comes to the business. So the business can manage this loan, or the business can minimize you at risk personally. So you want to look at, okay, if this business loan is being issued for real estate growth of any type of business, then you want to look at how will it affect the business and not you personally. So it allowed for like proactive decision making. Hey, do you need the money or not, right? Or it, requires maintaining a healthy balance between assets and liabilities. Will this, if I take this loan out, will it bring me or produce me more income? So therefore, this loan is going to be an asset eventually, even though once I have it, I immediately in debt of $50,000. Yes, it's a liability, but now I'm going to demonstrate the ability to cover those financial obligations on a consistently, especially when it's an adapt to the economy changing. So for an example, if you maybe do consulting, maybe you do credit repair, maybe you're in real estate and things are changing. People are not, booking consultations. If maybe your business is ran on a customer service base, maybe you're a makeup artist. Not too many people are getting their makeup done like they were used to. So now you've seen a cutback in your daily operations, which is demonstrating, is this the ability going to cover those loans or cover this grant that's going to cover this, any type of money that's going to be produced or sent to the company under a loan? Hey, instead of me having a personal guarantee, you've shown 3 years consecutively, right? Because let's even think about it. If you go back to 2019, right when COVID kind of started really got buzzing a little bit, and then it really got big in March of 2020. But let's just say you had a income producing business prior to let's say 2019, and sales went through the roof from 2019, 2020, 2021, 2022. And then we start seeing a decrease. But let's say your loan is stretched out to over the duration of 15, I'm gonna say months, but I'm just being generous. But sometimes you may get a big SBA loan and they say, hey, you have up to 4 years, 5 years, 30 years to pay it back, right? But let's say as you're looking at your numbers, will your numbers demonstrate the economy is changing, sales are going down? Will this affect me personally, or will it affect the business personally? So now that you're analyzing this is what people tend to not do. Some of them don't. One, ask the bank, what are the qualifications or the requirements in a consistent economic changing market? They're making changes. The BOI reports. Now banks are making changes. Hey, we got to make this. We got to change this. We got to update this. Changes are being made every day because enactments are being changed. Bill of Rights are being passed, right? So you have to look at this whole concept through and through, right? So what we like to say, here's an option that you could protect yourself personally by coming to the table, depending on what type of business industry that you're in. Let's say I'm going to use, let's stay within this area of daycare, right? You have a daycare, you have a building, you have equipment, which it can be the desk, the playground, all these different things, every activity that the children need for it to be a successful business. If it looks the part, state regulations, everything look good, then buy the equipment, buy the looks, the aesthetics, everything in position. Business or loans say, hey, yeah, we want to go ahead and, give you this money. Books are looking right. You always packed with students or children, infants. Every season that is changing, your daycare is booked. So they're going to look at the way that the business is structured, the consistency of how it's demonstrated on paper. So the reason why I want to talk about on paper a lot, because we walk into the bank and we're like building relationships, we're having small talk and we're chit-chatting, but we never offer, can it be a collateral exchange term? So we're going to read your terms. You're saying, I need for you to give me your personal social security number, because we don't see the demonstrations of the last 3 years, the last 2 years, even matter of fact, the last year. But let's say you say, you know what? If there was a default, and then you're standing on your books, you're standing on the history of your business. You know your business. You have evaluated your business. You have the right people in place. Let's say your team. You have, again, you're going according to the regulations of this business. It has been successful. You look at the studies, people having children every day. There's now looking at new laws passed. No one can, in certain states, depending on certain states, cannot do abortions. So you have all your history. You bring this to the table, and then you offer a collateral in exchange of terms, which means, so when you understand what will be the level of risk in your business, because every business has a risk, right? Every business. Somebody can get hurt at a daycare. We've seen on news, daycare, children getting left on the bus, children falling asleep, kids hurting kids, and what happens? A lawsuit comes to place, right? So every business has a risk. So when you're looking at, and I understand my risk factor, then you can negotiate what will be submitted as collateral. So yes, undertaking anything can be crucial decision when it comes to what you build, but no business is guaranteed. So you say, you know what? I got 5 buses. I pick up the kids, I pick up the infants. What I would do is, if there was a change, I can offer an exchange. I can offer you 2 buses, right? Versus all 5. I can offer you maybe this amount, the equivalent of the terms of the loan based on your taxes that's being filed each year. Because what will happen is, if there is a lawsuit, right? And there's a judgment that is taking place, you never talked about your exchange of terms. So what happens is the judge going to say, hey, we're going to enforce what the exchange collateral. They might say, we don't want them buses, we want the entire building. And you're like, wait a minute, right? 5 of those buses, hey, you might give up all the buses and tell the parents to drop them off now, right? You can now make changes depending on what it is. But if you never offer collateral exchange terms, what is the offer? What would you take in exchange of what you would give? Then you want to talk to someone higher up, because most of the time, a lot of these bankers are going off of training, policy, and control. They're going off a take it or leave it contract, because if you don't ask, they're going to just submit. Everybody's on a base terms. We're going to offer you this. You're going to take it. If you don't pay it, we're going to take everything that's connected to your name. But then you say, well, you know what? I want to change the terms in exchange of this, this, and the third. So therefore, partial of some of the business activity, not the entire business. And I started looking to other studies of other corporations, other businesses. Even this one, particularly because it's a Black-owned business, this is not to, this is just to bring light. So this is as an example. This is not to embarrass or to talk down about a particular business, but I'm going to use Turkey Leg Hut. I spoke on this before. Turkey Leg Hut was a high-end producing income. Sales was through the roof business in Texas, Black-owned business, but it turns out allegedly, because again, I want to be mindful, allegedly that there were some personal issues that came into the construed of contracts and terms and agreements. So let's say if it was a relationship, a husband and wife partnership, if it was, some type of agreement outside of their terms of business, they started to fail, or lack of better word, started to downsize, decrease. Something has changed in their business. But because they never looked at the terms, the company that was their supplier, rather if it's equipment, because again, we're going to talk about they can take equipment. Hey, they could take the food that's a part of the business, right? They can take, again, the entire restaurant, chairs, tables, trucks. If you have food trucks, if you have anything that is something that is an asset to the business in order for the business to produce income. So it put them in a downfall. But what happened? People are like, there's line of food. They're still wrapped around the corner. They're still cooking. So now in the naked eye, or should I say the public eye, people still like, they're still making money. But if you personally was the owner and you borrowed I'm going to just throw out an example of a number, $2.5 million in loans, and they only gave you the credit, right? They're going to take whatever's equivalent. Maybe they don't want the restaurant. Maybe they want this something that is a producing asset, because if you fell behind, and I'm not going to say this person is a failure, but if this business is failing in sales, that's not something that is showing the way that the way the business is structured is not showing that it's something that can stand through a decline in economy, decline in sales, decline in customers. We want that house. We see that your house value is $1.2 million. Now, instead of them exchanging, saying we want the business in exchange, that's the money I took out the loan for the business. Why do you want to take my house? Because you have to offer some type of collateral exchange. Now, this will provide security, while personal guarantee is involved in a personal risk. Now, if the judge say, wait a minute, according to these terms, there was an offer in certain terms that will cover the value of what the business had borrowed. So then that form, if you say, you know what, now the limits of flexibility in using the collateral for other purposes, it don't take you out personally. And your personal assets are not at risk. Now, this is a potential just depending on, again, the type of business industry that you're in. But again, when it comes to if you go have your business on a court docket, your business is in the headlines, the news, all these things, now it can potentially strain what? Personal relationships. Look, business relationships, if that business fails, right? All due to a misunderstanding or for you not covering what you're willing to settle or in exchange of collateral terms. So this business, also the business credit history plays a significant role in determining whether they will accept your offer. So if you have, come to the table and you don't even have a paydex score, and if you don't know what a paydex score, that is pretty much your business alone shows that it can pay back, debt. So what a lot of people do, and I know that I'm being long-winded, but I want to break this down in its totality. What a lot of people do is they start getting vendor accounts. So instead of saying, we need your social security number, what the business will do and say, hey, we're going to approve your business for maybe $10,000. Just go ahead and start off. You will now have this line of credit. You can pay the invoice based on when you receive the product. So let's say if you went to, I'm still on this restaurant, so let's shift a little bit. In this restaurant, you need napkins, spoons, forks, right? Tablecloths. But let's say Uline or Quill has these products, especially like bathroom products, and you're buying all these things and you don't have to put the money up first. You have something which called a net 30. You have within 30 days to repay this credit that was issued to you, right? Now, the thing is, what with business, different from personal credit, you can easily have a high score. The highest score is 100, right? We see people around 80, 85, 90, right? You can immediately get a credit score within 90 days because as you're getting the invoices, you're starting your business, right? Now the money is being made based on customers coming in, they're sitting at this restaurant, they love the tablecloths, whatever the case may be. Now you're paying the invoice back. Once they see that over a duration of time, guess what the vendor can do? Increase more of that invoice. So now instead of 10,000, they say, oh, we see that this business is a business that pays on time and they pay in full within that duration of what is agreed, 30 days. Now you pay it, and not only do you pay it on time, you pay it before time, and it makes your business look even better. So when it comes to having excellent business credit, it's all about how you can pay on time or before time without defaulting or, again, continuously having a relationship with them. So I know a lot of people may say, oh, that takes so long, and oh, no one's going to give you 50,000 based on only 10,000 invoice. But you have to remember the relationship, the level of risk in your business. You're showing consistency. You're showing, and it's again, these are demonstrations of how your business is paid. Now, I'm going to step off a little bit and talk about Layla Lockwood, LLC. People didn't understand. Why would this person LLC their name? And everything that we do, we're engaging in business. If you have the lights cut on, you have the internet, right? If you're watching this video, you got the internet, you have gas bill, light bill, water bill. These are the bills that are, if you want to have a roof over your head and have these necessities, because I like to go, they're called necessities because you need them to see, cook, engage in business. However, if you have it under a business account and you're going to pay these each month, I'm sure that if you guys are, have a household, maintaining a household and a business, and you turn these things into a business account, that's already there. 5 business trade lines that even show from your consistency. And again, it's all about what is shown out of your demonstration. Excuse me. All right. So again, now that your business credit history is good because it shows you have multiple trade lines, you have vendor accounts, you do good with business deals. Now, over the course of time, you're saying you don't need my personal information. We've built business relationships based on the business structure. So let's look at some major businesses that we've seen in this economy that has been growing. So in real estate has been growing. And here's these examples. Now, these examples of striving businesses that are now shifting. So we've seen in real estate, if you guys have been in the real estate market crash, we've seen what happened in 2008, but we've also seen an influx in, some 0% loans, some low interest rates. People are buying up the market, right? But here's the thing. When you provide valuable land as collateral to secure a large development loan, you can enable significant expansion. If you own these properties by yourself, they're in your name only, you're going to limit your expansion. This is why a lot of people, they say, once I get my first real estate property, I'm going to flip that property, I'm going to pull some equity out, and I'm going to immediately buy another property. But let's look at that. You have one property that's been taken out on a loan. You take one property and you buy it on equity, which now if you have a tenant in there, any income that is produced on this home is going back to that first loan, the debt, right? Or some people may say, I ain't about to put nobody in there and pay this loan off over a course of time. I'm gonna immediately fix this house up with the loan that I take out of the first home, and I'm going to sell it. And once I sell it, that high value, let's say if you sell it for over the market price, then again, you can pay off that first loan. So now you have your first home paid off. The second home has been purchased by that home, that other loan, that equity, and then you just keep rinse and repeat, rinse and repeat. But here's the thing. Most of the time, by the time they get to their third, fourth, it becomes so addictive, they take out another loan and they do it all over again. And some people say, I want a bigger, they get bigger, they expand their portfolio, right? Now, here's the thing. That looks good when it comes to significant expansion. But you have to remember at some point, if you're not moving those assets, especially with those houses, and protecting it in like an asset protection trust, what happened to those homes that you own? Let's say you got to maybe the fifth home and then the market crash, or there's some type of decrease in sales and no one's buying it and no one wants to fix it up. And now money just stops. Now you got to start saying, oh man, I got to give up house number one. Maybe I got to give up 2 houses, 3 houses. So now it minimizes your expansion because it's connected to you somehow. If you default on a loan, what happens? That bank may sue you and take you to court. Let's look at another example. Family-owned restaurants owners offer personal guarantee, fostering the trust with lenders to obtain necessary funds for renovations and expansions. Again, I gave you that example before when I talked about the turkey leg cut. But we do see that things can change when it comes to restaurants. Bad reviews. It could be someone may say, oh, there's a bad sanitation score. Or again, the food just may not be up to the pars of some of the individuals. That's not a guarantee that your customers are going to like this. This is why the aesthetics, they can say, listen, we have a family restaurant. We can offer you the fostering of this business is going to be located in a very high traffic location. It's going to be this type of food being served. We're going to have these types of events. That's why you notice a lot of restaurants open up. They got hookah, wings, karaoke, trap, this. It's always some extra aesthetics because they're trying to, again, build that trust with their lenders that we're going to be different. It's going to bring in a lots of money. But what's happening? Some restaurants are cutting back because there are a lot of people saying, look, it's expensive. We're going grocery shopping. Or when it comes to now the innovation, groceries are now being what? Delivered to the door. Here's another example. Tech startups utilize personal assets as collateral and secure favorable terms, okay? Leading to successful products launch and market penetration. So it's like, hey, I want to jumpstart this. I want to enter into this market. I want to open up this. They a lot is going to changing with digital, AI, right? So now if I say favorable terms, it's new. No one's done this. And here's something that's new technology and people need this. We need to survive off of this. Then again, as a tech startup, banks are like, show me what you can do. That's only on the terms, right? And then they're like, hey, we're going to go ahead and trust your product. We're going to go ahead and let you go ahead and launch in this market. I'll give you an example of this particular brand. I want to say Kylie Jenner, one of the Kardashians, she literally built a fundraiser. This is how sometimes when you have crowdfunding, multiple donations, building capital, you can do it on this level. If you got wealthy friends and they believe in you, this is a lot where tech startups and they're like, listen, we believe in your vision. Maybe if you've seen the show Shark Tank, they say we believe in a vision, but in order to start this, right? What are your sales? They ask you these questions, right? What are your pitch? If you don't know this, you don't know your target market audience, you don't know what's going to scale in an up and down market, or if it's going to survive something again, can it last another pandemic? They're like, we believe in you because you're very passionate. You may know some things, but to have security, I need a piece of your ownership. And this is what happens. So then what's shifting? Everything's shifting. Right? And this is not saying anything to scare you. This is pretty much saying that when it comes to real estate, when it comes to restaurants, when it comes to tech startups, they're now starting to see, wait a minute, the economy is changing because of inflation. The more that they go up, it's pushing a lot of people out. People are changing, making a decision. They're holding on to their money. They're making the decision. A lot of people are invested into problem-solving solution. So if you want to write that down, if you have a vision or if you already operate in business and there's some change in your business, what can be something that you offer to your audience, your customers, your clients, right? Whatever product change you may make into what will be a problem solver. So let's look at an example in real estate. You see how it was like, I mean, it was doing good at some point when average of all forecasts, this is like a forecast. So realtor.com, people go on there, they were looking at the 5.4% rate. Man, they started buying. Everybody's like, buy houses, right? There was money flowing. SBA loans was being issued. Everybody had money. I don't know if you guys see it on, because the world when it comes to computer purchasing, right? Or computer shares, technology now is allowing us to see things on a bigger scale from just our phones. We may look at everyone was on social media, everyone was an entrepreneur, everyone was rich, everyone was this, everyone was saying, do this, and it was very successful. And then we start seeing a change. People start dying down and they start talking about credit repair. Because what are we talking about? If you personally guaranteed everything and it's not guaranteed, the market has changed. Now something has changed in your life personally. So let's look at real estate. Home prices will always be defined by supply and demand. So you see that the rates were up, people were buying, they had the FHA loans, all these things were up, right? Because more buyers, and then there was a market where it was less homes. So it's like creating that scarcity, like, oh, I need to buy now. These prices are just too good to be true. Well, the more the home prices started rising, this exactly is when we start seeing it during the pandemic, right? People were afraid to again, not take advantage because they've seen it before. History repeats itself. In 2008 market crash, a lot of people wasn't prepared, and they seen soon as people started going through foreclosures, losing their homes, hey, death, right? People started dying. You may have had somebody caught COVID and both lead or head of the households died, right, in a hospital, and families had to be forced to sell the homes. So that makes those prices lower. So now when these rates are expected to go down, if inflation continues to drop, so that's another thing to look at. If the inflation goes down, then again, people are saying, okay, I want to go ahead and get some more houses. But we've seen home prices moderate and housing supply grow as buyers demand to pull back due to higher mortgage rates. They lock you into this contract. They may say 0%, right? Now you're up to 5.1%. You're behind. You're like, wait a minute. My mortgage was maybe $1,100. Now it's up to almost $1,500, $2,000, right? And that's pushing you out the market, because if something's changed in your financial or your income abilities, you can't afford it anymore. What happens? It pushes you out of the mortgage. You start defaulting on your mortgage. They start going into collections, and they start going into foreclosure. So this is why, if you're very knowledgeable, you understand the cuff and how to come in the market and how to jump out the market. Now, family-owned restaurants. Recent franchises that were once big money makers for such brands as Burger King, McDonald's, Popeyes, right, Hardee's, have started to file bankruptcy. If you filed, bankruptcy, that don't mean that this business don't have to still continue to operate, right? If you don't have no personal ownership. So when you start looking at it, if you guys want to write this down, when you start watching this video, or you can pause it and you can say, you know what, who owns KFC? Who legally owns McDonald's, Subway, Hertz? Like, you start looking at these big major companies, and then you start realizing, wait a minute, we can order these things from Uber Eats. We're not sitting in these buildings anymore. So why would they need to have these locations, right? Why would, if so much of AI or technology or computer-based generated businesses, they're struggling. So due to these struggles with inflation, low traffic, and rising the cost, Popeye's franchise sought to file a Chapter 11, predictions either at the death of his owner and the sole manager in May of 2022. So there's a lot of things that may have happened. Again, if you may pass away and you own the business and you're the only one that's on the books, you're the only one that's access on the bank account, you need to think of these things. If you have a business, whatever your business is, and your model is Everything is ran based on me. I'm the only one that knows bookkeeping. I'm the only one that knows how to access the bank account. I don't have nothing that's like a trust that don't die. I don't have nothing like another entity that will, like, maybe like a Shark Tank investor that will, be the shareholder and now carry out the remainder of the legacy. But my shares will go inside like a trust that will feed my family for generations to come. This is how a lot of these businesses are structured. And again, you can always look into a financial advisor or a real estate broker and things like that to, get these accuracies of these numbers. Do your due diligence, check behind me, because what happens is in 2022, it left the company at a drift because there were some changes made. The owner may have passed away. There was some change in, low traffic. So when it comes to the premiere of Burger King, I want to talk about this particular franchise because that's a very familiar franchise. They had over 172 unit of Burger King operations, once owned by the same person, right? But they also filed for bankruptcy. And there was some other article that I did briefly look at, wasn't really deep into it, that they've also bought some other Burger Kings or other franchise through a new entity from an auction. So it's like you're dissolving some of this massive debt that you accumulated, but you're also now entering into another private contract through another entity. And this is how major corporations are really thriving, even though it looks like they're failing. They're changing systems and models based on what? How they're showing you, right? So this is stemming from either death of an operator, inflation, labor costs, right? Why would I hire someone to be on a register when someone can just immediately order Uber Eats? They can, go through the drive-through. There's now systems that you can walk in and just key in the screen. You ain't even got to talk to nobody. Key in the screen. And now, how, depending on how far, advanced in technology that this will go, there'll be computers making your burgers. Okay. So now it's like, why would I invest into all these things? I need to downsize or cut my labor costs, and also because of flow of traffic. There's no need to walk into the facility. So many businesses have suffered from stagnant sales and weaknesses compared to other competitors, right? So if you have a Burger King, but you got a whole Little Caesars pizza going viral on TikTok, right? Or we got customer on TikTok or social media that creates these trends, and like a chicken sandwich go viral, it produces a heavy competitor business. The reason why I brought this up is because you may be questioning your ability in business. You may be going through something financially, questioning everything, saying that this don't work. This is not you. This is not business. When you're looking at multi-million-dollar franchise business that's been around for hundreds of years, that are shifting, that are changing due to the inflation, due to the economy, due to everything that is happening, they are now starting to get into technology, understand something new, learn something new, and start reshifting and reprogramming, or even just saying, I just need to go ahead and say, I need to start all over, right? I did go start all over. It might be the same name franchise, but again, they're going to start under subsidiaries, which is, again, through another parent company, through another entity, okay? The tech startups, according to business owners, reasons for failure included money running out, right? Remember, there's no economic loan, economic impact loans. There's also when it comes to SBA loans, people not paying their money back, right? So they're like, oh, we're not issuing out no more money. Money ran out. All right. So it's being in a wrong market. So you might invest it into the wrong thing, right? Lack of research, bad partnerships, ineffective marketing, and not also being able to connect with an expert in the industry. So I know that may feel like a lot of people like, you know what, I joined all these mentorships, I joined all these programs, course here, and people are coursed out. They are burnt out. Because why? They start realizing this was a bad investment. They start realizing, dang, I connected with somebody and I, as the buyer, did not do my research. I maybe tapped into the wrong market. Maybe I just wanted to do something because it was working for somebody else. Right? And you may be just saying these things, but now that you're learning and understanding that there's going to be always a market for if you have a problem solving solutions. So this is not saying anything that I'm mentioning in this video is not to scare you by saying you won't be successful in a restaurant business, you won't be successful in real estate. I'm not saying you won't be successful in tech startups. I'm not saying you won't even get approved for grants and things like that. I want you to be very thoroughly understand your target market, start doing your own research and saying, you know what, based on the analysis, have you analyzed your business? Or is it just based on, I had a good month this month and next month I'm gonna wing it and I'm gonna, sometimes entrepreneurs feel like the only way they eat is they gotta hunt to kill in order to eat, right? But some venture capitalists, angel investors, and billionaire evangelists poured their cash into tech startups, and they're willing to attach their brand, their name to any buzzy phrase like blockchain, AI, Black-owned business, minority-owned business. But they didn't realize I done had an AI presentation or a pitch deck sent over to me, and these people don't know nothing about business, right? So now they're like, ain't no more money. We ain't got no money running out, running low. And now they're changing the stipulations of who will get approved. So that's why you want to make sure you get educated on, okay, how should my business look? How should it be dressed up, right? You want to dress up your business, even if it's on paper, even if you're an online or virtual, I like to call it like a satellite type of business where you don't have a location, you run it from home, you still want to have your business look dressed up, all right? But now with high interest rates and uncertain economic environment and the banking crisis, remember the Silicon Valley Bank that hit hard? It started putting a lot of scare in banks and anybody that make investments that is not guaranteed. Remember, business is not guaranteed. So this is why we're talking about protecting your asset, protecting what you build. Because if business not guaranteed, then we know this repayment of this loan may not be guaranteed either, right? And even investors know when we give you this money, we know that it's not guaranteed that it's going to come back. So we have to put some stipulations in there to say, in order to continue growth with our companies, we either have to take a percentage, we got to take you out, right? We got to take you to court. We got to take everything that's personally connected to you and what you own in your name. So this is where, private ownership businesses comes into play, right? So there's a shortage on funds for early stage companies and lack of opportunity for late stage companies to cash out. So even if you are a new startup that kind of like, we don't know, but maybe if you would have, came to us in 2019, it would have been a little better. Maybe they're also looking at how would we be able to get our investment back, right? If this is a down market. Look at these franchise here, 7-Eleven, Circle K, Pizza Hut. I mean, I haven't seen some of these, again, storefronts where you can just walk in and we have so many technology where they can just make it and deliver it. All right. So just be mindful that, even when you look at these major companies, if you are in any type of business and you're like, things are not going right, sales are shifting, you're shifting mentally, you're like, what do I do? How to protect what I have? Start rethinking to save your own self, right? Because if you're already going through court process, then at that point, then they're going to see what you already have in your name. But if you don't have any type of court document, summons order, then you need to start looking into positioning yourselves to say, you know what? I need to make some immediate changes because guess what? These franchises that are very known are making changes. Why? Because lawsuits are hitting the books. Lawsuits are going out, and this is what's encouraged me to talk about this because of so many people contacting us and saying, wait a minute, I know you talk about asset protection. I know you talk about trust. I know I should have a trust, but what do I do now? I am behind on my SBI. I am behind on my loan. I'm behind on my credit card. Sometimes they have, credit card companies are issued through business. I'll give an example. Let's say Discover, right? Or let's say American Express. That's the one I wanted to really talk about. And again, this is not to bring any company down. This is just an example. Let's say American Express. Now, American Express has something where they say, if you have a personal account with us, we could go ahead, if you have a business as well, we could go ahead and roll you over into our business program and then offer you a business line of credit. Or if you go to a bank and they see that you have some working capital, maybe, on your ledger. So this is why it's important to know your books. On a ledger, it may say, now you could take your money in and out the bank account. That's not a problem. But let's say it says on the top of your bank ledger, the average deposits, right? Maybe your average deposits are $20,000 if you have a merchant, or maybe you have a third party like Stripe and Intuit, Clover, maybe you use a third party, right? But they can also look at your third party, which is the sales rate of what comes in the business monthly, right? Then you can also do something that's called a drop. I've done this before, where there's money being held over in PayPal, Stripe, and then the money will drop on a certain day, which it will show consistently on the books if there was $20,000 a month. Now, if I was to put a cap at that, let's say I wanted to say on the low end, I want to say $10,000, right? I want to keep my cap at $10,000. If 1 month is 10,000, another month is 13, then another month is 34,000, another month 20,000. Y'all see where I'm going with this? It's all over the place. It's inconsistency. What do you think a lender is going to say? We're not sure actually what your business really can produce. It's up and down, up and down. We don't know if your market is going to go beyond below $10,000 monthly. So you want to, put some type of cap there. If you're bringing in $20,000 and you can, put a hold on it, keep your money held in another account and then make deposits into your bank account. You can always do that as well. All right. So asset protection. Let's get to the meat and potatoes when we talk about lawsuit. Now, I cannot say whatever business that you have that you will not get sued. Okay. We don't know, so the lawsuit prevention in itself is always the proactive thought, right? Remember that safety net, or, being prepared is like what I like to say. So when implementing asset protection, it's a strategy to protect a person's wealth from potential threats, such as lawsuits, creditors, or financial liabilities. It is a proactive approach to preserving and securing one's asset for the future, right? So learning these strategies early on can provide individuals and businesses with a peace of mind, knowing that, hey, if you slip and fall on this property, or we talked about a daycare, if, this particular child or something is something you're trying to sue the business, it's not me personally that owns it. It's not me personally that went into any type of obligation. Some businesses, and again, I want people to be very strategic. A lot of people don't have insurance on their business. If you have an LLC, it could be general liability, umbrella liability. It could be errors and omissions. Get some get some insurance on your business, right? So if that insurance policy max out, let's say, this lawsuit is, maybe your policy only $2 million. What if this lawsuit is $3 million? Now they're not going to say, well, we got the policy amount, cash that out. Now we got to take something else. We either going to take the business, we're going to take your house, we're going to take something. I'm like Denzel, I'm leaving here with something, right? So learning these strategies early on, it can protect individuals and the business and give you peace of mind, knowing that their hard-earned assets are shielded from unforeseen risk. That's when I talked about, have you ever sat at a table when you're looking at getting funding and you offer that collateral term, right? You can say, well, in exchange, if you were to give me $50,000 and I were to produce this, and the third, we only are going to sacrifice, and I know that's a hard decision to make. If I had a daycare and I had some school buses that go with the daycare, we only sacrificing three school buses. You're not going to take my home. And if that's in writing, that's a way that you can protect the unforeseen business. If you have a truck company and you have a fleet of trucks, there are a lot of times that they start looking at just your personal assets. Because a bank ain't gonna want no trucks. What they gonna do with the trucks? But you may say, this is what I have on the table. This is my collateral offer. Because then without the business still flowing, and again, you're looking at those franchises that still sell burgers when they go in bankrupt. They may be giving away 1 or 2 different franchises, but they're not taking out the personal owner. Okay, so preventing lawsuits is better than dealing with the aftermath of legal battles. It can be financially draining and can be significantly an impact on individuals or the company's resources, bank accounts, and or personal credit score. By implementing preventive measures, individuals and businesses can avoid the expenses, the stress associated with lawsuits. To tell you a story really quickly, I have not been sued, thank God, right? But there has been some complications, right? And the complications is a misunderstanding of conduct. So me, I'm an advocate that always talks about protect this, protect that. And then I end up growing and didn't realize when you grow in such a way of light, it just attracts some negative attention. It's going to attract lawsuits. We started realizing that controversy has been the growing source of our commercials. And we like to use social media as our advertisement base, right? But we started seeing, well, the higher engagement with people saying, oh, who she thinks she is? Oh, she's not an attorney. Oh, this, but not looking at the actual information that we're putting out in the community. You get some people that are upset and they have threats. So for me, as anything that I've built for my family, I know I have make sure that I'm like, okay, this name is off of this document. This name is off of that document. You want to make sure, because now by compliance with laws, statutes, regulations, when it comes to your business model, by adhering to legal requirements and industry standards, individuals, businesses can avoid potential legal entanglements. Okay, I want to put entanglements because it was like some type of entanglement. I had to be like, whoa, whoa, whoa. Why y'all so upset here? I know who I am, but it's, lawyers and advocates, they kind of like walk a fine line. So it can be a complex to identify each role. Because, hey, if you have an attorney over there say, the reason I became an attorney is because I want to help people learn this. I want to help people in representing them in court. You see me, hey, I didn't go to law school, but what I have done is I've experienced this, and the third, and I have seen that there's a way to, again, fill the need in this voided area. I want to be the voice of the people. I wanted to be able to help and advocate and say, hey, look out, right? So you won't find yourself into these, again, legal threats, legal ramifications, or even worse, again, losing the business. So for me, I started saying, you know what? I don't know everything. And that's something that you also can take a look at yourself and say, I don't know what is going on. So much has changed. It's time for me to take a step back, reset, dig into some more information, start looking at what's being presented in front of us. Because to be honest with you, a lot of these changes are publicly, right? A lot of bills' rights have been passed, a lot of regulations has been changed, a lot of statutes has been updated, and a lot of laws has been, passed, bills, and compliance has been enforced, right? So now you say, to be successful, I'm not against you, but I don't want you to be against me. So what I want to do is I want to understand a little bit more, and then also ensure that it's a little clear that this particular business is following this, whatever your business is protected in this, for so forth and so forth. So when it comes to business, you want to make sure, hey, you put some things on there for allergy protection, vegan protection. So you're not making sure that you're violating any type of code and conduct, right? So to get and here's another thing. A lot of people, I mentioned to someone the other day, we did a consult in reference to saving the business. And I said, well, did you ever get a personal guarantee insurance policy? And he was like, of course, on the phone, he's like on the computer, on the Zoom, he's like looking it up as we like on there, right? So you guys can pause it, you can look it up, and you can, write it in your notes by saying, wait, what is a personal guarantee insurance policy? So this type of policy, it provides financial protection by covering potential losses that incurred due to the default or insolvency. So my when it comes to a lot of businesses, and I could talk about T. Rump, that he done filed bankruptcy on these Trump towers 99,000 times, right? He has so many different lawsuits. He has so many different debts that is out. He has a bad credit score. And I didn't understand what is protecting this man. One, you have to look at certain things as, is this person an entity? Because in business, you can only assume. Remember, you can only assume in business. There's no guarantee in business. So now when you start saying, I'm coming to the table different because I have now analyzed this, I have been inquisitive, I have now insured for implementing certain strategies that's going to not only protect me, but to protect the business. So let's just say I started this business a month ago. Let's just say I am to walk in this business in personal guarantee. But at the table, I come with a personal guarantee, and then I personal guarantee me, right? Then you're protecting you on top of they're saying that when you personal guarantee, you're literally become insurance on top of the business. You are the insurance, right? But who's going to protect you? So look up personal guarantee insurance. They're very small. This is not like a really big company. You know, there's small companies, and start inquiring about your type of business industry. If it offers it, again, you have to be mindful depending on the type of policy that you get, how much you're going to get for covering for potential losses that occur during a default or insolvency. Because again, what happens when you have a partnership? You ever think about, you have a partnership, you maybe have 2 people or more, and you're like, wait a minute, I'm the only one that took out the EIN. Wait a minute, I'm the only one with personal guarantee, but it's 4 or 5 people that's going to get profit, right? Or when there's a lawsuit and you can't front the bill, they're going to look at, well, who's the person that took out the loan? You're going to start looking up. It go from being a multi-million, it go from being a multi-partnership business to pointing, all the fingers pointed at you, right? So this insurance types, it covers you as the promissory holder under any contractual agreements. This may be subjected to business revenue. So again, you want to make sure that you're bringing in some income. You can't just go in into I want some PG insurance and you ain't got no money. So they want to analyze. So you want to make sure that you can clear. Or hey, when you don't know what's required, what do insurance companies say? Let me get you a quote. So you start calling and being proactive. So therefore you can say, you know what? I understand the market is changing. Things have shifted, but what I'm not going to do is be ignorant to everything that's around me. I want to be proactive and implementing certain strategies. And again, my main strategy is what I talk about all the time is if you are in need of asset protection trust, which is an irrevocable trust that will ensure that not only protect you while you're living, and protect you when you're operating a business, depending on how it's structured. So it's important to understand how it's structured, right? Maybe you're a successful business and you're saying, you know what? I have the money, but I just want to make sure everything's going in the right place. I want to say this. We help guide you. We offer the guidance, but you can always retain an attorney. You can always hire a financial advisor. Hey, you can also sit with us and we can help you learn some information, right? So therefore, when you're sitting with your retained partners, if it's a tax preparer, CPA, a financial advisor, bookkeeping, anything that can help you thrive, because I am not knowledgeable in all business genres. So you want to be mindful. I am really specialized in asset protection when it comes to building a legacy and keeping the wealth in the family for generations to come. So I thank you for being patient with me and listening and watching this video. Thank you for watching.